how to actualize your real gains, not just gross profit, but net profit. How many of you feels that net profit is very important, not just the gross numbers that you always see how the market wants you to see? Okay, if that's you just like me inside the chat, so I know that you want to see really actualized gain, not just gross gain, because these are paper value, right? Okay, right. Diana says so, Susan says so as well. RJ said as well, Mabel too. Okay, Sean, Robert, etc. Awesome. Okay, and over here I want to share with you how to look at it from a different lens. All right, and looking beyond price gap, what else you should be looking at? Okay, because price gap is just one indicator of which segment you should be looking into. But as an investor, all right, you should be looking at the real gains. Okay, that means not just gross profit. You want to look at net profit. And what does this include? It includes income from a rental. It also includes things that are against you, such as interest, property tax, stamp duties, legal fees, income taxes from rental as well. Okay, so in different segment that I mentioned just now, how does it apply? So if you buy a new home, then you have lesser outlay in mortgage and interest because you are using progressive payment to pay your bank loan, right? So that's where you save on interest. And of course, possible rental costs due based on the fact that you need to delay moving in, especially if you are already owning a property right now and you're selling it off and you have no more home and you need to rent while waiting for a new home. That's where you have a possible rental cost as well. Okay, so if you're buying a resale, then what are the costs? Possible rental income if you are renting out as an investor, as a landlord. And of course, you will then have renovation fees and maintenance fees to pay as well. So this is where if you use it for utility. And of course, sub-sale, assuming it's already TOP, then what are the possible plus points? You will have rental income if you choose to rent it out. But of course, the negative side would be, of course, your maintenance fee. And renovation, not so much, because you are getting all the brand new, provision, white goods and whatnot provided by the developer. So your renovation fees are pretty, decent. It's not going to be a lot more expensive compared to a resale property. Okay. How to actualize your real gains, not just gross profit, but net profit. How many of you feels that net profit is very important, not just the gross numbers that you always see how the market wants you to see? Okay, if that's you just like me inside the chat, so I know that you want to see really actualized gain, not just gross gain, because these are paper value, right? Okay, right. Diana says so, Susan says so as well. RJ said as well, Mabel too. Okay, Sean, Robert, etc. Awesome. Okay, and over here I want to share with you how to look at it from a different lens. All right, we're gonna use development side by side to compare in this three illustration. And over here we are using a new homes here against resale here. So we're going to use a new home versus resale. Okay, and these new homes here side by side are Penrose beside Sim Urban Oasis. So Penrose is a new launch back then in 2020. It was launched then. It's a 566 units development, and Sims Urban Oasis was a new launch back in 2015. But at the point of application over here, we are using from year 2020 to year 2024, 16 quarters, which is a 4 years horizon. In 2020, Sims Urban Oasis is considered a resale already in this illustration, and it's 1,024 units. So looking at the PSF of entry and exit, we see Penrose going about 1,500, and the exit price was about $2,000 per square foot, which is pretty decent. And of course, for Sims Urban Oasis, going in at the same time of 2020 as well, if they would buy a resale instead of new homes, they buy about 1,004 and exiting at about 1,008. Okay. So if you look at the price gap here, 1,519 PSF against a resale at 1,004, 8.5% here. Let's play a game again. So which particular segment is right now undervalued you would buy? Would you buy Penrose or would you buy Sims Urban Oasis? Okay, so just type your answer P or S inside the chat so I know that whether you get what I mean here. Okay, right. So Susan says Penrose, RJ says Penrose, Mabel says Sims, okay, and Cassandra says P. Okay, so some of you are getting it and some of you are not getting it. All right, most of you are getting it. So those who says P, you are getting it right, because new homes are typically around 25 to 30% more expensive than resale, right? In this instance, they are just 8.5% in difference. So definitely new homes are undervalued in this instance, okay? So if we were to put in the total value, the Penrose would have bought in at about 1.5 million using 1,000 square foot as an assumption, and would have exit at about 2.04 million. And this would give you a capital appreciation of 517,000, or you talk 34% over a period of 4 years, and that's 8.5% annualized gain. Okay, it's all written here. Okay, and of course, if you were to go into Sims Urban Oasis, you would have entered at about 1.4 million, assuming it's 1,000 square foot as well, and exiting at about 1.792 million too. And this would only give you 392,000 in terms of profit. And total capital appreciation is about 28%, annualized gain at 7%. So beyond this, what we want to look at is also the fact that Sims Urban Oasis actually has rental income if you are an investor buying this to list it out. So how would the rental income looks like? So over a period of 4 years, given the medium rental in terms of per square meter here, you could have actually collected about 238k more in rental income. But of course, these are not your net rental. You still need to offset certain fees, right? So the fees that we offset here is brokerage fee. Okay, that will be for 2 years. So if we were to look at 4 years and the rental rate of brokerage fee, it should be close to $5,000 per month. Okay, and back then in 2020 to 2024, rental prices shot up tremendously. Okay, and that's why it was close to $5,000 a month. There's also, you need to net off your bank interest, your renovation and repair, and the renovation and repair, we actually use 5% of your total rental income as your renovation and repair fees. Okay, and this is if you were to list it up. We also need to let off your property tax for 4 years as well under the non-owner occupied rate, and also maintenance fee that you pay for the 4 years too. So given all these figures that you need to pay off as cost, you will then net off with around 357,000, and your net capital gain is actually 26% at a rate of 6.4% annualized gain. So this is your net fee. Okay, but considering Penrose, because of the fact that there is no rental income, okay, you are just paying, reducing, I wouldn't say reducing, you are paying progressive interest rate. So your interest rate are lesser, so to speak. In total, you paid about close to 70,000 given what is expended within the progressive period until TOP. Okay, and also you got to pay off your agent commissions, you're going to pay off stamp duties, legal fees when you buy and when you sell. So everything all in. Okay, with all this in consideration, your net gain is actually 20% capital gain and at 5.7 annualized gain. And this is effectively only at 346,000. Okay, so in real numbers here, this is around $10,000 or $11,000 cheaper or lesser. I wouldn't say cheaper, lesser returns than Sims Urban Oasis. Okay, so in gross number, it looks really good, but when it comes to real gain, there's about 11,000 shortfall. So in this instance, we also want to calculate your outlay, your initial outlay when you buy the property, to the returns of what you're getting in net margin. Okay, so for Sims Urban Oasis, we bought it at about 1.4 million, so inclusive, assuming you're taking 75% max loan to value, you would have down pay about 25%. Okay, and inclusive of your stamp duty, you would have paid up to 390,000 in terms of down payment. And for Penrose, because you buy slightly more expensive at about 1.519, your total output will be about 425,000. And how hard is your money working for you? So in these instances, we see from left to right, Penrose is putting in 425,000 to get you 346,000 gain. And Sims Urban Oasis is putting in 390,000 for 357,000 gain. So in this instance, Sims Urban basically has his money works harder for him as an investor, right? Okay, but of course it doesn't come as as easy as it is. You got to deal with tenants, the hassle, repair and whatnot every year or every time when you switch a tenant. Am I right to say that? Okay, so that said, every market has its pros and cons, but over here, what you want to see here is the net margin. So how many of you feel that this is something very insightful for you, given that we are putting everything into numbers here? Okay, if that's you, just like me inside the chat, so I know that this is something that you never know is calculated this way, or you never know these are the considerations that you got to consider as an investor buying properties, right? How you calculate your net margin. Okay, awesome. We see Tracy, Doreen, Angie, Diana, and also Kuma as well. Okay, and over here we just want to be really transparent here and not biased in any way to really let you see. So this is under the new homes versus resale segment. All right,